Investing for Beginners, a guide to building wealth. Investing can be a great way of building wealth over the long term, but it can also be overwhelming for beginners. With so many investment options available, it can be difficult to know where to start. The good news is that investing does not have to be complicated. Whether you are planning to start investing to grow your retirement nest egg or to achieve other savings goals, this guide will help point you in the right direction. Watch on to find out the basics of investing for beginners. Determine your investment goals. The first step in investing is determining what you are investing for. Without a clear goal, it will be hard to make sound investment decisions. Some people invest to save for retirement, some invest to save for a house or car, while others invest to generate income. Once you know why you're investing, you can set achievable investment goals. Learn the basics of investing. Before investing, it is important to understand the basics of investing, such as the types of investments available. There are several types of investments like stocks, bonds, mutual funds, ETFs, real estate, etc. Each type of investment has its own specific advantages and risks. Knowing the basics can help you determine what investments are right for you and your goals. Assess your risk tolerance. Investing always involves taking some degree of risk, so it's important to determine your risk tolerance when investing. Ask yourself how much risk you are willing to take and how much money you could afford to lose. You will also need to consider how long you want to keep your money invested. Open an investment account. Once you have researched and learned about the different type of investments and set your goals, it is time to open an investment account. You can open an IRA, brokerage account, 401k, or other types of accounts depending on your investment goals. Many beginner investors start with a robo-advisor account, automated investing service that uses algorithms to create and manage a diversified investment mix. Diversify your portfolio. Diversification means investing in a variety of different types of assets. Diversification can help reduce the risk of your investment portfolio by spreading your money across different investments. This way, even if one investment performs badly, you still have other investments that may perform well. If you are new to investing, the key is to start small and go slow. Don't let the vast array of investment options intimidate you. Learning the basics of investing, setting investment goals, and having an investment strategy will help you take control of your finances, build wealth, and achieve your investment goals. Remember, the key to successful investing is to make informed decisions, stay disciplined, and have realistic expectations. Happy investing!